Hey everyone, I'm Shane Murphy, and today we'll talk about how to register your business. First, you're going to have to decide whether you're registering a sole proprietorship or a corporation, and we have other videos to help you make that decision. But once you've decided, here's what you need to know. For a sole proprietorship, you can run the business under your own name. For example, take a plumber named John Plum. He can run his business under his name. It's simple, it works, no problem, no registration required. But imagine John Plum wants to give his business a unique brand name, like John Plum's Perfect Plumbers. Then he'll have to register that name because he's no longer operating just under his personal name. Now comes the part everyone loves, government forms. If you're gonna do this yourself, you need to locate the correct forms for your province. Then they will ask you for a series of details like the type of business you're opening, your name, home address, and business address. You might also need to go through a name pre-screening process depending on your province. After that, you'll need to register for a business number, which is like your tax ID with the Canada Revenue Agency. This will allow you to register for programs like GST or HST, payroll, or import-export licenses. Now, none of this is brain surgery, but it can be slow and time-consuming. And if you make any mistakes along the way, government agencies will generally reject your application and ask you to start over from scratch. Incorporating a company is a little more complex than registering a sole proprietorship. But here's a quick overview. Just like a sole prop, the first step is to choose a name for the corporation. Remember that this is your formal corporate name. It's not necessarily the same as your brand name or your trade name. Your corporate name needs to satisfy 3 legal requirements. It should have a distinctive element, a descriptive element, and a legal ending. After you've decided on your name, you'll need to file the Articles of Incorporation forms with the government. For this step, you'll need to determine your share class structure and your company's initial board of directors. Now, filing documents with the provincial or federal corporate registry is only half of what's required when incorporating your business. Filing with the government doesn't complete the incorporation process. You'll also need to properly structure the corporation. This includes the process of issuing shares to yourself or any other shareholders. Otherwise, you won't have any record of who actually owns the corporation, and that can cause huge problems down the road. So you need to complete a series of legal documents that include things like corporate bylaws, shareholder and director resolutions, director consents, and share subscriptions. These are the basic steps to register your business as a sole proprietorship or to incorporate in Canada. You can certainly do some of this yourself through the government, but if you incorporate that way, you'll be missing out on the company formation documents. So you'll be stuck with effectively half a corporation that's missing a lot of important records. Traditionally, entrepreneurs would turn to a lawyer to ensure that both the government documents and the company formation documents are properly prepared. But the problem with legal professionals, especially for early stage small business owners, is that they can be expensive. They can also be busy and might be hard to track down when it comes time to incorporate. So a lot of entrepreneurs are looking for other alternatives. Ownr offers the best of both worlds, a quick, easy, and affordable registration process, whether you're going with a sole proprietorship or a corporation. All the information you need is in one place, and it's simplified so you can get the job done without any hassles. The cost is a fraction of what a lawyer would traditionally charge, and you can still be rest assured that your business is complete and set up for success. Check it out yourself by clicking on the link below in the description. I've been your host, Shane Murphy from Ownr. Remember to subscribe to get more tips on how to grow your small business in Canada.
Hi everyone, I'm Derek Hoffner, and today we will talk about one of our most exciting topics, taxes. So once your sales ramp up, you may need to collect, register for, and pay federal goods and services tax, or in some provinces, HST. So let's talk about the differences between the two. GST is the federal tax most businesses selling goods and services in Canada need to collect from their customers. The GST rate has been 5% since January 2008, but some provinces today combine PST with GST for HST. This means, depending on your location, you may need to charge HST instead of GST. You will need to register for a GST or HST account if you satisfy these two conditions. First, sell taxable supplies in Canada. And second, if your business has generated $30,000 in revenue over the last 12 months. Most goods and services in Canada are taxable supplies. Everything from car repairs, hotel accommodations, clothing and shoes, and even consulting services. So, if you have to register, how do you know what taxes to collect? Well, it all depends on where you live. You may need to charge GST, HST, or GST and PST. Ontario, Nova Scotia, New Brunswick, PEI, and Newfoundland have combined their provincial sales taxes with the federal GST to create HST. And in British Columbia, Saskatchewan, Quebec, and Manitoba, PST is separate from the GST. So if you operate in one of those provinces, your business may need to collect, charge, and remit both PST and the GST using two different sets of forms. Alberta and the 3 territories don't have a PST, meaning your business only has to charge the GST. The last thing to keep in mind is sometimes it makes a lot of sense to register for your GST or HST account number earlier than the $30,000 limit. And the reason is all because of tax credits. After you register for your GST or HST number, you not only have to start charging your clients the taxable amount, but any GST or HST you pay as a result of expenses can be used as a tax credit at the end of the year. In addition to the general rules outlined here, there are other details that might be important in your case, such as determining if the types of goods or services you sell are taxable. So if this all sounds complex, you don't need to worry. There are a few takeaways to make it really easy. First, you must register for a GST or HST account number if you've generated $30,000 in revenue over the last 12 months. Once you register, you must start charging your clients the appropriate taxes. And sometimes it makes a lot of sense to register early because of tax credits. Best of all, it's easy to set up a GST and HST registration by using Ownr. Check it out for yourself by clicking on the link in the description below.